welcome to Morning Trade with Money Control in association with M Stock by Mirai Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed on YouTube and we'll have it addressed by our guests on the show. Before bringing him on board, let's see what the global handover looks like, because largely it's been a mixed set of cues really. But yeah, global markets did finally take a breather on Friday from the sell-off that we witnessed through the week. European markets closed slightly higher on Friday, with Stock 600 ending about 0.1% higher. It was a mixed close on Wall Street as well. The S&P 500 and Nasdaq bounced on Friday after a brutal week of selling. Dow closed marginally lower, but all the major indices, or rather they all ended the week in the negative, with the S&P 500 posting its worst week since 2020. Stocks in Asia this morning have given up their morning gains, all major indices trading in the red after China announced no change in its benchmark lending rates. For our own markets, SGX Nifty is hinting at a weak start. Do remember, last week was a tad weak for the Lal Street as well, and even on Friday we did close lower in trade, and SGX today hinting at a negative open. Let's get started and talk about the technicals of the market, what the trade setup looks like, and what are the stocks that are likely to be in the spotlight. Raja Venkatraman of Neo Trader joins us this morning. Good morning and thank you so much for chatting with us. Monday morning blues, looks like that's going to be the flavor for the markets. What is your reading?
Nice welcome, which all of us have been expecting. Everyone thought that the markets would rebound, but that's not been the case at the moment. So what's really happening is that the momentum readings are clearly not in favor of a recovery yet. And you can see that last week, the markets created new low, especially the Nifty, and the worsening global cues are clearly indicating that there are many factors which are contributing to the same, be it inflation, be it a weakening rupee, or even the rising interest rate. So what I feel is that the powerful gap which set out last Monday would continue to play an impact on the overall sentiment. So going forward, if you're going to have a view on the market, it has to be with a bearish bias, because even the higher time frames are suggesting that the bearish bias would continue to persist, and we should continue to look at every rally to be a sell. So the supports which were holding on the higher time frame, the supports which are holding on around 15,800, which was touted to be a point of recovery, would now convert its role into a resistance. So on the upside, I would see a cap of around 15,800. Well, we are trying to survive the 15,000 mark, which is the immediate support, and if that level were to break, 14,750 would be the next level which I would be looking for. And looking at the way the max pain is set up on the option open interest data, I clearly envisage that every rally is going to be a selling pressure unless we see a decisive move beyond the levels mentioned, that is 15,800. We should continue to be a seller on every rally. But contrasting view is seen in Bank Nifty. It's still trying to hold on the March 22 lows, but we need to see how the global cues are going to play an impact, because that's what is the trend at the moment. So overall, it's a bearish bias as we start the week. We need to be very careful as we pick and choose, because right now it's not a time for buying on dips. Rather, you should use this opportunity to sell on rallies. Investing, momentum investing, etc., that play has to be shelved for the moment. So those who are only looking to invest, this could not be a right moment at this point in time.
Okay, well, that's a fair amount of caution being flagged off from Raja. But talk to us about Bank Nifty as well. Do you have a similar view there as well? Is it likely to be relatively, or rather weak in times to come as well?
Bank Nifty, like I had mentioned, it's not broken the March 22 lows yet. So there is some bit of hope in Bank Nifty as it's trying to retain the March 22 lows. But then if there are not going to be any supportive triggers, then I don't think that Bank Nifty could also hold on to the March 22. But then it's going to be a very tough challenge as we participate. And Bank Nifty, from a trader's perspective, intraday traders especially, Bank Nifty is something which we need to track actively. And if there is going to be a rally, then the first signs of the rally will emerge from Bank Nifty, because that's what is looking to try and give a fight to the bearish camp.
Okay. I want to shift your focus on pharma names. In fact, the entire index, if we look at Nifty Pharma, clearly keeping in line with the larger trend of the market, has lost close to 10% in the month gone by. But let's talk about specific two stocks that could be in the limelight today, and that's Alkem Labs and Aurobindo Pharma. Let me quickly read out what the news flow there is. Alkem Labs has received a Form 483 with 3 observations for its US facility. This in particular inspection was conducted by the US FDA between the 6th and 17th of June. Now, if we look at Aurobindo Pharma, they have acquired some business in a company called GLS Pharma. In fact, they've acquired 51% stake there. GLS Pharma essentially operates in the oncology segment, and they have manufacturing unit in Hyderabad. So an acquisition news and a US FDA news wherein Alkem has got 3 observations. So these 2 stocks are on our radar as well. But talk to us about the entire pharma pack, and if you could share your thoughts on these 2 stocks specifically as well.
Yeah. So the entire pharma pack, which had the haven of a safe investment or a safe trading camp, now that sheen has gone over the last year, and the continuous selling which is emerging in the pharma underwrites the fact that the overall bearish hand is going to persist in the pharma pack. And if people are looking at shorting, so pharma is the name which is coming up quite aggressively. So the IT and pharma are collectively amongst the most bearish sector which I'm seeing right now on the entire broader sectors. And if you're going to go into specifically into Alkem Lab and Aurobindo Pharma, the setup in Aurobindo Pharma has suddenly changed, because the overall prospect, what you're looking for Aurobindo Pharma in terms of a revival, is now being seen, because it is trying to hold off around the 500 levels. Now, if we were to see a recovery, we will see it faster in Alkem Lab, and the Alkem Lab chart setup is looking positive, and you could expect a range towards 3300, which is very much possible, because the overall momentum is showing an oversold bounce. So, but in Aurobindo Pharma, there is no oversold bounce yet. It is trying to stabilize. So if you want to choose between Alkem Lab and Aurobindo Pharma for a pharma bet on the long side, it could be Alkem Lab, or you could also do a pair trade between Alkem Lab and Aurobindo Pharma.
Okay. Thanks for your advice there. Let's talk about Dilip Buildcon as well, another stock from the broader universe that could be in focus. They've won a contract for Surat Metro Rail project. They were declared, or the JVC company, JVC of Dilip Buildcon rather, which is got this Surat Metro Rail project. The new order is worth 1,061 crores. They've also received completion certificate for 2 road projects in Karnataka at the same time. So Dilip Buildcon could be one of those stocks in trade that could be hogging some limelight. But how are the technicals looking? Because if I look at the last 1 month pattern, the stock has been range bound, oscillating between 200, 220, 230 levels. Which way do you see, see it go from here on?
Yeah, so yes, there are positive news triggers which are emerging, but eventually, if you want to have influence from the price action clearly suggests that there is some more pain left. So probably this positive news flow could help it stem the current decline. But then I don't envisage any kind of up move here. So, this news flow should not be ignored, but at the same time, this news flow should not be considered for initiating some long position, because the momentum continues to be on the downside, and there is fresh onset of bearish signals which I'm seeing on the charts as well. So it's best to avoid this stock at the moment.
All right. What about Galaxy Surfactants? A bulk deal has taken place there. SBI Mutual Fund has offloaded 1 lakh shares in the company, and now the fund's shareholding in Galaxy stands reduced to 2.98%, and previously their holding was 3.27%. So a slight change has come in there as well in the overall shareholding for Galaxy as far as SBI MF is concerned. But in the last 1 month, Galaxy has been able to buck the trend of the market, and from I think 2500 odd levels, it has climbed up to 2900 levels, close to 2900. Talk to us if the uptrend is likely to continue.
Yeah. So what I have been sharing across my other presentations as well, that the specialty chemical space in particular is a very resilient sector. And every dip in this sector is seen as a buying opportunity by many participants. Of course, there are various news flows which all of us are familiar. And that is why you are seeing that every time there is a dip, it tested the March 22 lows and it's again rebounded quite well. So any move upward of 3100 would, unleash or unlock a very strong potential to the upside. So I am positive on this stock. So there is no sign of any profit booking as well. So I feel that the upward trajectory should continue, and anyone looking to buy should buy only after 3200. But at the moment, it is looking quite good. So one can continue to hold on to the stock, and the bias continues to be remain to the upside.
Okay. Raja, request you to stay on hold with us. We'll come back to you for some viewer queries and your stock ideas as well. But for now, we're joined by my colleague Manisha Gupta to talk about gold and what's happening in the precious metals basket. Good morning, Manisha, and thanks for joining in. Why must one hold on to their gold investments at this juncture, despite what's panning out across the globe? Because although gold prices have not risen much as expected on account of the Russia-Ukraine crisis, is the US's slow growth going to be a booster for the precious metal? What is your assessment?
Hi, thank you for that, Karuna. Well, yes, it has been a bit of a disappointment the way gold has behaved, especially with the fact that we had a war, we had inflation, we had COVID concerns, we had demand growth which was declining. But it really seems to be changing right now because, the inflation is really high. We have seen gold prices hold around 1850. Even as other asset classes have been declining, gold perhaps has been the only one in the last couple of weeks which has actually continued to hold on. Even on one side, you have inflation, so that is going to be supportive. Even if there is rate hikes, there are fears of recession. So in that case as well, you will see gold prices holding firm. Investment demand has continued to be on the stronger side. If you look at the ETF buying, the numbers are on the positive side for Indian markets as well. Every single month in this year, you have seen investment. AUMs actually continue to grow. The global central banks are buying. Investors are buying right now. And the markets do look supported right now. The fact being that, the gold has been very volatile. For the longest time of years, you had perhaps $50 to $80 of a move in a quarter for gold. In the last couple of years, we've seen $200 to $250 of a move every quarter. That really seems to be happening in a month right now. So for this year as well, you could perhaps be looking at a range of 1,700 on the lower side to 2,000 on the higher side. So that really would be a playing range. But yes, having said that, 5 to 8 to 10%, depending on what your portfolio looks like, you should have some gold as a cushioning.
Typically, what has been gold's relationship with inflation, if we look at the historic trends? And if you could also tell us from here on, is the long-term story looking intact for the yellow metal?
So, Karuna, I have in front of me the 3-year, the 8-year, and the 10-year chart, and it does show that gold has moved, or at most of the times outperformed inflation on the higher side. We have seen strong gains. Actually, if you look at the last 1 year as well, we are looking at 8.5% of gains in case of gold, more so in the Indian currency because of the rupee depreciation as well. And yes, you should be holding gold if you look at this year or the next year as well. As I said, the downside could be at around 1,700, but there are more chances that you could be looking at 1,850 where we are trading right now and 1,950, 2,000 kind of levels as well. It is going to be very volatile going forward. But the fact being that even as the dollar index is trading at a 20-year high, we haven't seen that sell-off or a collapse come in gold.
Okay, all right. Just one quick question that, some of our viewers have also posted on the live feed. Right now, is it a good time to buy gold or is it better to go with gold bonds? And, today the SGB's new tranche is also launching the sovereign gold bonds. What is the advice that experts are giving right now?
Well, there is an advice to start buying in case of gold, but with the kind of volatility that you have in gold. So while the first tranche, as you said, opens from today, is open till 24th of June, and the offer price for online investors comes at around 5,041, is a good level to buy. But you could be buying, if you have 100 rupees that you want to spend, perhaps you could buy 50 rupees in this tranche and 50 in the next one as well. As I said, the volatility is going to be really huge. It is a great idea to buy gold at around below 5,000 kind of levels. You could be looking at those as well. So when you look at the Indian markets, you perhaps are looking at a range of 49,000 on the lower side and 53,000 on the higher side. So yes, there could be another dip coming in case of gold, and that would be a great idea to buy. But we have seen sovereign gold bond tranche open for the first time in this year. It has been delayed for some reason by the government. Some investment definitely should be done, but should we say, don't put it all at the same time in this tranche itself.
Okay. All right, Manisha. Thanks much for joining in and for highlighting the big trends that are playing out in the precious metal space and what are some important levels to watch out for gold. Raja Venkatraman is standing by. Let's take it across to him. Lots of queries coming up from our live feed as well. First up is Selva Maya, and they want to know if buying Tata Motors is a good idea. What is your sense on the technicals of Tata Motors, Raja?
See, Tata Motors, the entire auto pack, if you see over the last month, auto sector per se has been holding on. But if you look at Tata Motors, it's trying to survive this entire bearish bias. So if you're looking at a support kind of a role, then yes, Tata Motors has dipped down into some supports around 380. So unless this 380 level breaks, there is no sign of worry. So if you are looking to do fresh investment, then this could be a good opportunity for you to buy Tata Motors. Like I said, buying on dips is not the advice at the moment. But then if you're looking to invest into Tata Motors, if you're already having a position, then this could be a good ploy with a level of around 380 to 375 as a strict stop loss. This market demands us to maintain stop losses because every level which we have seen or which we have anticipated so far has been breached.
Okay. What about sugar stocks? Naveen wants to know which are some of the attractive picks here, if any, that one can look at.
Yeah, I've been tracking the sugar space, and especially when the sugar, there's a record sugar output which is seen in India. So there are certain sugar stocks which I am favoring, and amongst them for the retail participant, I find that there's a lot of active participation in Renuka Sugar. So two stocks which I would like to suggest, one is Renuka Sugar and the other is Praj Industry. Both are specializing in this ethanol blending, which the government is also favoring at the moment, and we have done quite a good effort on that aspect as well. So these two stocks are the ones which I would recommend.
Okay. Shubham Srivastav is asking for your view on Bajaj Finance. In fact, we've been getting a lot of questions on this one. Largely been weak in the last 1-2 months, but what is the trend likely going forward?
Yeah, considering the industry in which Bajaj Finance is in, so there has been a definite reduction in the market participation into the credit space. But then the credit by the banks are also at a 3-year high. So looking at the overall sector positives, I think that the correction which we are seeing in Bajaj Finance is part of the market scenario per se. And I don't look at Bajaj Finance as an investment point of view right now. It's more of a trading point of view. I would wait for the market to stabilize before entering Bajaj Finance, because the kind of gyrations which it gives is quite high. And if, as an investor, if you're not mentally geared up to handle such gyrations, then it's best not to participate in Bajaj Finance.
Okay, one more query coming in. This is from Hiren Joshi on L&T Infotech. This one has seen very wild swings in the last 1 month. Is that trend going to continue?
Yeah, so the entire IT space has been in quite a bit of pressure. Yes, LTI has definitely seen some good days, but right now it's undergoing some large-scale decline. And what I envisage is that unless it crosses 4,500, which is its immediate set of resistance, one should not be looking at entering into LTI. Once it crosses 4,500, it will actually unlock its potential of a revival. Till then, it continues to be a sell-on rally. As you can see, the entire IT space itself, the entire IT space is undergoing extensive selling pressure. So this would not be an appropriate moment to enter LTI.
Okay, all right. What about your own stock picks? Which are the stocks you are keeping on your radar?
Yeah, while the entire market is definitely on the bearish side, there are certain stocks which are doing well. So I thought that I'll mix up the entire basket. So I have got two recommendations, one on the long side, one on the short side. I would go with the long in Sun TV at 535, placing a stop loss at 525 for a target of 550. Because I find that the stock seems to have stabilized. There are signs of divergences appearing. So I think that there could be a good bounce which the viewers can take advantage of today. It's strictly an intraday play, and you could take advantage of that up move which you can see. But the overall markets are continuing to remain on the bearish side. But like I said, certain stocks are giving that opportunity. It's got an upgrade as well. So Sun TV is a stock which I've preferred on the long side. On the short side, from the consumer space, I'm going to give a sell in Pidilite. Pidilite has given a fresh breakdown on Friday. The continued pressure is seen, and one could short it around 2000, place a stop at 2025 for a target of 1965 to 1960. Yeah.
Okay.
These are the two recommendations from my side.
Okay, so there's Pidilite and Sun TV, some more mid caps to keep on your watch list. Thank you so much, Raja, for joining in and helping our viewers out with their queries and to highlight the key levels of the market to watch out for. Guys, thank you so much for tuning in. That's all we have in this edition of Morning Trade. Stay tuned. Markets with Santo and CJ is coming up next.